Hey everyone, this is Zach with Palantir Research. Palantir's first quarter of earnings for 2023 are out, and we've got some great news and disappointing news, at least in my opinion. But Wall Street after hours likes what they see, so let's just get into it. First, we gotta talk about the big positive elephant in the room, which is GAAP profitability, but also talk about how they did against guidance they also did last quarter. So they achieved a second consecutive GAAP profitable quarter of 1 cent per share, GAAP net income of $17 million. And management confirmed they expect to be GAAP profitable for all quarters this year. Clarity around this helps investors gain confidence on the stability of their profitability, and now gives me more confidence in possible inclusion into the Standard & Poor's Index in the future, maybe something to look out for in 2024. Also, no notable accounting tricks this time, where they were able to eke out, compared to the previous quarter in 2022 Q4, a $17 million loss from operations. They instead had a $4.1 million operating profit. I'd say the biggest driver, outside of lowering expenses and growing revenue, is the interest income of almost $21 million. In one quarter, this is significant, meaning they've got a large portion of their cash pile in treasury bills. Honestly, I'm mixed about this as an investor, and also during the earnings call, they mentioned they expect stock-based compensation to trend up while controlling for this for GAAP profitability. But just looking at the operating expenses, we can see from last quarter they are all down. The other big news is that they beat guidance for the quarter. So last quarter they guided for Q1 2023 to have revenue between 503 and 507 million, but they actually beat that big at 525 million. Then for adjusted income from operations between 91 to 95 million, which they also handsomely beat at 125 million this quarter. So very good for Palantir shareholders, but you can say a lot of companies as of recent have been sandbagging their guidance to get the easy beat, but I'd still rather have this than a miss. Now onto the metrics I covered last video. Here's where I feel a bit mixed with some good news and some disappointment. Starting with customer count and commercial customer count, I'm not happy with this. This is still downtrending faster than I would like. It was noted on the earnings call that timing on government contracts also is a factor in the closing of deals. So I don't know if this affects the customer count significantly, but regardless, this needs to be monitored closely because with their AIP platform being released, probably more later this year with getting more customers on board, will this have an effect on these customer counts later on? We'll just have to see how that plays out. But now a good thing here, the deals closed at $1 million, $5 million, and $10 million looks really good to me. This quarter they closed 64 deals compared to 55 last quarter for at least $1 million. And that's with a huge jump also to 22 deals, of which were at least $5 million. That's from 11 last quarter. And then jumping to 8 deals over $10 million from 5. So this is really good, nothing really to note here. Operating cash flow also very excellent for this quarter at $187 million versus $79 million last quarter. All I need to say here also is keep up the good work. We know stock-based compensation does play a role here, with management saying they expect an uptrend in SBC. So I'm assuming this will stay healthy for the rest of the year, but just need to see the extent of SBC propping this up later on. So back to the GAAP profitability narrative. So we know the huge driver in the dollars and their confidence in hitting GAAP profitability appears to be this interest income. Palantir has invested a huge portion of their cash pile into treasury bills. Just looking at the balance sheet, you can see the cash go down over $1.3 billion, but their marketable securities jumps up $1.6 billion. So essentially they still have a lot of cash and safety. So just in the meantime, management doesn't plan to immediately use that $1.6 billion towards the business. So what this essentially means is outside of their growth from operations and other investments, us shareholders are getting a return on our money basically on par with interest rates. Now when dealing with large cash piles, it is difficult to meaningfully and quickly deploy with a strong ROI that you're confident in, especially in today's market conditions. A risk-free return on the treasuries is great for flexibility as long as the majority of the invested amount is in shorter term bills, meaning if there is an opportunity cash-wise, it's not locked away or bills are prematurely needing to be sold at a loss like we saw with Silicon Valley Bank. But as a shareholder, I can't come up with a very bad and a very good reason why this is the case. You know, this also limits how Palantir can grow, or similar to dividends, right? It's like they're saying we don't know how to get a better return on capital at the moment, so we'll just take the easy guaranteed one for now. Long term, this can hurt shareholders if the business could have been supercharged with this cash. Or on the positive side or confidence side for Palantir management, they believe that they can still grow substantially regardless of how much cash they throw at this because their product is truly mega scalable on its own. So they'll just continue to want to grow their cash and cash equivalents pile. We'll have to see though how the rest of this year plays out, but this almost guarantees they will be GAAP profitable for the year of 2023. I have more confidence in that, especially with the guaranteed income of treasury bills. So yeah, I just wanted to cover the highlights here. I'm going to release some more videos that go into more detail on specific metrics, but put a comment below with your thoughts and I'll see you in the next video.